Well, hello, everybody, and happy Tuesday. It is July 12th, 2022 already. Stephen Meade here with Domicile real estate for people who love houses. This is our Southern California housing market update. We're glad to have you with us. And I want to talk just a little bit about understanding the limitations of some of the data. And I think usually when people present data, they're using it to support their thesis, right? And the implication, right, is that these are the numbers and this is infallible. And sometimes these numbers don't always tell the whole story. And so I want to go in here and we're just going to keep an eye on that a little bit. And I know I talked a little bit about this last week regarding the timing with July 4th holidays, how that could skew some of the numbers. But there's kind of some other things that we're seeing in the marketplace, and we have some mixed signals. And I want to explain what we're seeing and why we're seeing it. So we're going to go back here for our total active listings, right? And if we look at this number, this is just what is available on the market in raw numbers, period, right? Like, so our $1 to $2 million category, higher quite a bit than last year, though that number is rising admittedly a little more slowly. And our under 1 million number, which is really, quite a bit higher. So if we look back at last year, we were about 3,000 and about 6,000. So we'll go ahead and say 9,000 total homes under $2 million in Los Angeles and Orange counties active on the market. This year we are at 4,000, and we're going to go ahead and maybe call this like 7,700, right? So 4,000 and 7,700 is 11,400 versus 9,000. So that is a significant increase in inventory versus where we were last year. And you'll see this most recent number ticked up. I do think that part of that might actually be, again, a little bit of that holiday kind of numbers skewing things, but maybe not as much as we would have had last week. So if we go here and we look at our last 14 days of new listings, we're going to see that this number is still pretty depressed. Some of this definitely is still having some of that holiday influence, but we're absolutely seeing a reduction in the amount that sellers are increasing. Now, if we go back to last year, this is pretty close to where the peak number of new listings sits in our market, right? I think we're here right about 4,000. And this year we are below 3,000. So that's over a 25% drop of new listings. So I do think some of this is the seasonality, right? Like we're approaching that peak point of when people put their homes in the market. But I think another part of it is, I think the word's gotten out, for sellers. I think this notion of put your home on the market and buyers will beat a path to your door, no matter how ugly, no matter how messy it is on the inside, no matter how much work it needs, it doesn't matter. Buyers will pound down your door to buy your house. And I think the word's gotten out that that is no longer the case. And what that is doing is it's really pulling back, I think, some of those would-be sellers. Also, that combined with interest rates, I think selling and moving to another property is not as attractive as it once was. So we are definitely seeing a reduction in that rate at which new houses are coming onto the market. And that's part of our thesis of we're seeing, why are we not seeing kind of the wholesale median price drops maybe that we would have expected to start seeing by now? So if we go on here, if we go to our new escrows, these are also down, right? Like, so if we take these numbers combined, last year we were at maybe we're at 2,800 or so in 1,000 in our 1 to 2 million category. Where does that put us? That puts us at, roughly 3,800 new escrows in a 2-week period. Now looking back 2 weeks, what are we at? We're at under 2,000 and just under 1,000. So maybe 1,800 and 800, that's looking much more like a 2,600 units going into escrow a week. So that's definitely a pretty sizable reduction, 20 or so % in new escrows. So that's very real, right? Like we have a very real reduction in demand. And I don't want to discount that because the numbers here, I think, are pretty clear on this. We go down here to our absorption rate, and that's really reflected in this absorption rate, is even despite fewer homes coming on the market, the rate at which they're getting gobbled up is even lower. So where does that put us? Under $1 million, we're kind of in that maybe 65% range. That is a mild seller's market. And then in our 1 to 2 million range, we are actually below 60%. I think that's much more of a neutral market. I'm going to go off screen share here because these are not exactly in the order. Maybe the order that I would have liked for this week. But I will tell you something else. We're seeing, and I want to do this before I get to the actual price categories. We're not seeing big price drops, at least not in the median prices. And I think that that's not really telling the whole story here. I think that's very misleading because that's telling you where the middle of the market is. I don't think that is doing a good job telling us, it's not telling us what's happening at the bottom and the top end of the market. And what I mean by that is not just in terms of pricing, but in terms of what we have called desirability. I think that is absolutely not telling us the whole story. So let's get back in there on the share, and I'm going to kind of go over some of this stuff for you to kind of tell you what's happening or what we're seeing. So here's the prices. And I want to divide this up by ranges, right? The 25th percentile, this is our entry level pricing, and this is for closed homes. So my usual disclaimer, this is about a month ago, but you know what? The market wasn't great a month ago. Interest rates had already gone up significantly. We were seeing demand slow down. What are we seeing in these prices? Well, yeah, are they maybe off some of these little peak points here that have happened? They are, but these aren't showing a dramatic movement downward. Are we where we were at the beginning of the year? No, we are still higher. We haven't given up those gains. If we go to our median, right? This is in that price point that's maybe in that kind of $800 and some $1,000 range. Have we given up those gains from the beginning of the year? Nope, we haven't. Our prices are still noticeably higher. Let's look at our 75th percentile. That's our luxury range. Where are we versus the beginning of the year? We're still quite a bit higher. Now, have we given up a little bit on our peaks here? Maybe a little bit in these numbers. I see a slight downward trend here, but what are we talking about percentage-wise? Less than 5%. I don't think we're seeing these big price movements that people expected despite seeing the demand change. And I think I have a little bit of a theory about this and about a reason why. So just to show you how much statistics can be used kind of in the wrong way, right? I'm 5'8", so 5'8". Shaquille O'Neal is well over, I think close to 7 feet tall. The average of our two heights is somewhere in the mid 6 foot range. I don't think that's a very good description of either of us though, right? Mid 6 foot doesn't describe either of our heights. And that's kind of what we're starting to see in this market when we look at these prices. The median is a great way of telling you what the middle price was, right? Meaning if 100 homes sold, it tells you what the price of the 50th home was in terms of a ranking. But that really doesn't tell you what's happening at other ends of that market. What I mean by that is the bottom, the least desirable homes might have slipped downward quite a bit. And the most desirable homes, they might have even gone up a little bit further. And so, or you could see the reverse trend, right? There could be softness in the high end market and not much softness in the bottom end of the market. And both of those could result in essentially the median staying the same. And I think that's a big part of what we're seeing in this market is this is not a homogeneous market. This is not a market that is moving evenly. And what that means for you is it means if you are looking for those magazine quality homes, I've said this before, you are going to face competition. Those homes that get reshared on Instagram and posted around everywhere, those homes are still having a lot of activity. Now, we are seeing buyers are taking a little longer to decide. There's no longer this fire drill of you saw the house and you have 15 minutes to decide. And I'm going to get into where we're seeing that in a second. But you're absolutely going to face competition on homes like that. At the other end, these homes that previously would sell because people were just excited to get their offer accepted, those homes are soft. I think that pricing has moved more. on those lesser desirable homes. So, what I'm trying to say is everybody uses median home price, right? This number right here in the red, this is the number that everybody likes to quote when they're talking about quote unquote home prices. But that really doesn't tell the story of the market. When you have shifts in these, how soft are undesirable homes and how stiff is the competition in the most desirable homes, that can really sort of obscure some of this data and what's happening price-wise. And that might be the reason why some of you are going out in the market and you're frustrated because you're saying interest rates went up quite a bit, even though the past couple of weeks have actually been really good. We'll get to that in a second. Even though interest rates have gone up, affordability has gone down, buyers, it's been a little bit soft. Why are prices not falling? And that's the biggest reason why we're seeing that is a lot of it's how you're measuring prices and what market you're looking at. If you are looking at attractive, well-positioned homes, they might take a little longer to sell, but they're really selling for the same prices. They're still finding buyers. It's those lower desirable homes that are softer in that marketplace, and those ultra highly desirable homes are still getting some record-breaking prices. We talk about being a source for homes, being real estate for people who love houses. Well, there was an Eichler home in Orange that recently broke a price record, almost $2 million for an Eichler that borders a busy street. That is not a sale you would expect in a softening market. And yet that is one of the most desirable homes. So, you're still seeing at that upper end of price points, you're still seeing bidding wars, and you're still seeing prices that surprise people. And I think that's offsetting some of those losses in those softer homes. So, back to kind of where we are, this means you really have to be individualistic in your strategy. Sorry, that was rambling a little bit. I wanted to make that clear. I should have practiced beforehand. I apologize. Still active after 14 days in the market. There is some skewing from our holiday weekend still in this number. Though, yeah, guess what? On the whole, houses are sitting longer. And surprise, surprise, our list close ratio has fallen a bit. It's still around 102% for under $1 million, and it's still just under 104% for our 1 to 2 million. So it's still pretty strong on this. But like I said, you're going to see these really head towards that 100% point. If we go here for days on market for new contracts, this is really where we're seeing a change in buyer behavior, right? I think the standard used to be home went on the market on Friday. Everybody saw it over the weekend and wrote offers. Offers were reviewed on Monday night, and sometime by the middle of the week, homes were in escrow. What we're seeing now, on the other hand, is we're seeing buyers want to go back for a second look. We're seeing sellers setting longer offer deadlines. They're allowing that full week before even accepting or before closing that door on reviewing offers. And what that's doing is that's bumping up our days on market, even for new contracts. Here we are at, I think, 27, 28 days for both our under 1 million and 1 to 2 million categories. Yes, that is a sign of a softening market. But again, we're not really seeing giant price movements, at least not in the middle of the market and not the top of the market, but in those lower desirable homes. And that doesn't, like I said, that's not always cheaper pricing. Desirability in whatever segment you're in. Now, if we look at our three-way chart, this really to me explains a reason why these prices are remaining sticky in the center like this. And that's because rents have risen up, and this differential, right, this payment index versus this rent index, that gap is not very big. And I think that gap is, again, what we need to watch. A wide gap is a market that is unstable and looking for an equilibrium. A narrow gap like this shows a market that has a bit more stability. Now, is this gap still a little wider than we've seen? It is, and I wonder, are those rents going to eventually meet this, or are we still kind of figuring out where we are? But the smaller that gap is, the more stable pricing is. And then finally, we have our prevailing mortgage rates, right? What did we see happen? Mortgage rates crested, they fell a little bit, then they went back up, heading almost towards 6%. And then they've really been on a little bit of a decline since then, now heading back towards that 5%. That is still way more than the 3% we enjoyed pretty much for most of the end of last year, that around that 3% number. Obviously, that's a bit higher and the market has adjusted. We are seeing lower demand, but we're also seeing fewer homes come out of the market. And I think because rents have risen, that's really keeping prices propped up, at least for the time being. So thank you guys so much for watching. Obviously, we love you. We love having your questions, comments. We love reading and answering those. So keep those coming. Don't forget to like, subscribe, and hit that notification bell. And as always, if you or someone you know is looking to buy or sell real estate in Southern California, we would love to help them or you. Definitely reach out to us. Have a great day, everybody. We'll see you again real soon.